I'm Michael Fox, and this is the Prospector News Podcast. And I'm privileged to be joined today by the editor and publisher of the Gloom, Doom, and Boom Report, Dr. Marc Faber. Welcome to the show, Marc.
Thank you very much for having me, and good day to all your viewers and listeners.
Thank you. Yeah, I've been wanting to have you on since January, but my schedule just didn't allow for it to coordinate well with yours. I look at 2024 and I can't think of a better person to be talking about what's happening than yourself, because I see nothing but gloom and doom throughout the world.
Well, some countries are in doom territory, and some financial markets are depressed, and others are in the sky. So I look at the world in a realistic way, and we have some bright spots in markets, and we have some less bright spots.
Yeah, no, definitely. I look at the world though, and there seems to be a whole lot of geopolitical flashpoints and problems that are going to affect us. And in some cases, we don't even know what those effects are going to be. We have a war with Russia and Ukraine that keeps dragging on. We had a new conflict created last fall in the Middle East between the Palestinians and the Israelis in Gaza. This is causing a drain on Western economies as they prop up these war machines.
Well, I'm not sure it's a drain in the long run, for sure. But I want to make one thing very clear. Ordinary people in the US, Europe, Russia, China, the Middle East, they do not want war. War is the creation of some pathological governments who want to solve a problem through warfare when it could be solved through diplomacy. And these wars are a creation by the governments and not by the people. People don't want to war. Who in the US would want to be on the front line in Ukraine or in the Gaza Strip and so forth? Nobody. And the same can be said of other countries. But at the same time, it's organized, and you have to ask yourself, what is the intention of the organizers to have war? And that we don't know precisely. There doesn't seem to be a clear objective. But in the meantime, we have money printing and we have huge deficits in the industrialized nations. I mean, you look at the US, the household deficit, the budget deficit by the government, and the debts piling up and so forth. And then they go and tell us, yeah, the economy is strong. Yeah, if you send each household a check every month, then they can go and spend. So in that respect, spending has held up, but it's an artificial condition that cannot last. And of course, the central bank, in the case of the US, the Federal Reserve, they make money available by essentially printing money. Now, recently, the balance sheet of the Fed has diminished. But if you look at the market action of bonds, of stocks, of residential real estate, you do not feel that there is tight money. And in my view, the major trend in the world, as a result of what you said of these wars and these confrontations, and also domestic political instability, as a result of that, in my view, inflation will continue to accelerate. The economy of ordinary people will continue to deteriorate. And I'm saying this because the wages of people may go up, but they do not go up by the same amount as the price increases have gone up. In other words, you get more money, but your purchasing power is diminishing.
Yeah, no, I'm seeing that. It's a really strange economy right now from my eyes. The lower the person's income, the more they're affected by, and in some cases, you know, the lower classes and the lower middle classes are already in recession, and it's just not hitting the, you know, the rest of the economy in the same way. Are you seeing that in other parts of the world as well?
Yes, it should be clear that when you print money, people with assets, whether these assets are real estate stocks or collectibles, paintings, and so forth, these assets tend to go up in price. The people that have nothing, they are hurt by increase in prices because they have to pay higher food prices. And for a lower class income recipient, food as a percentage of total income is relatively high, whereas food as a percent of total income for Jeff Bezos and Elon Musk and Bill Gates and so forth is a non-event. You understand? Whether you earn $1 billion a year or $100 million a year, food is not a factor for you because you don't spend more than, say, $500,000 on food a year. But for the guy who earns $50,000, $100,000, if the grocery bill goes up by 30%, which it has over the last 3 years since COVID, it makes a difference, especially if he has children that he needs to feed and 3 dogs and 2 cats. So each household has a different rate of price increases. And as you pointed out, the lower the income is, the more you're touched by increasing prices, not only for food, but for insurance, taxes, indirect taxes that you can't see.
Yeah, and you know, I'm remember back to my university years. I'm 56, so that's, you know, that's 30 years ago now. But we were taught this sociological model, the Maslow's hierarchy of needs. And right at the very foundation of it was food and shelter. And I'm wondering what your thought is. We have all sorts of elections all over the world. I think I heard a number that's like 80 plus countries with elections coming up in 2024. If people are worried about food and shelter and their security and that, how's that going to affect the body politic as they move into these elections?
Well, that I don't know precisely, and I don't know precisely to what extent poor people resent the rise in housing costs and in food prices, because the government, assisted by the media, which collaborates with the government, tells people, oh, food prices go up, it's because of Putin. This price goes up, it's because of Xi Jinping in China, and so forth and so on. And food prices now are going up again because of Houthis in Yemen. And they never will blame themselves and the policies that they implement that increase regulation and the cost of doing business. That they will always neglect. But the reality is simply this. There are many ways a government can finance itself. Through taxation is usually the best. The second one, they can also default on debts. That is a possibility, but very difficult in today's complex world where there are so many parties involved. If you default on government debt, then the pension funds get hurt, and so forth and so on. And the pension funds have unfunded liabilities to start with. And the third way, and that's the easiest way and the least visible way, is through inflation. Inflation is a tax. It's a tax on the system. And it touches, as you pointed out, the lower income recipients more than the high income recipients. Just consider this. I'm in a fortunate position, but say 3 years ago on my deposits, because I run a business, so we have always a lot of liquidity. On my business, I received interest of less than 0.5%, and in some cases 0% interest. And now I get over 5%. So for me, the recent inflation has been relatively favorable.
Yeah, but the person is struggling, the other part of that corollary is the person struggling, inflation is taking away from them because they don't have any savings.
Yes, absolutely. And also people who have borrowings. And these are normally the poor people. The rich people like Musk, he may have borrowing on the corporate level, but not on the personal level. I don't want to be misunderstood. I do not make the rich people necessarily responsible for it, but they applaud socialism and they applaud each time the government throws out money in transfer payments. Why? Because the money will flow back to them. They go and buy at Walmart and Costco and Dollar General and other department stores, or they go online and buy goods and so forth and so on. So the money flows immediately back to the wealthy people.
Yeah, no, definitely. But let's talk about Walmart for a second. It was reported in the last couple of weeks that a lot of the principals of Walmart were net sellers of their own stock. Like, what are they seeing that's causing that?
I don't know what the motivation is, but let's say you are a member of the Walmart family. The bulk of your wealth is in Walmart. It is natural that given the rise in the stock price, you would take some profits. In general, what is surprising is that insider selling in most sectors is very high. In other words, insiders are selling stocks because they can see the stock is high, not just for Walmart, but in the technology sector. On the other hand, and I said at the beginning, there are some sectors that do well and some sectors that don't, and some countries do well and others don't. But the insider buying we observe is relatively heavy in the mining sector and in the oil sector, energy.
Yeah, because here, regardless of what we do, we have to, we still have to grow food, we still have to power our economy, and we still have to have the raw resources to make things.
Yes, you need a lot of oil to build environmentally friendly power stations and windmills and batteries and so forth. It's all complete nonsense, this green movement. I'm all in favor of preserving the earth and so forth and so on. Don't misunderstand me. But it should be economical and not completely uneconomical and also damaging more the earth than if you had just used fossil fuel.
Yeah, no, I agree. Like I see stuff and it's just I shake my head and go like this doesn't make any sense, but
Yes,
they
exactly.
continue to do it.
But politicians today are not doing things in an economical way and for the benefit of the majority of people. Politicians are like belonging to a sect of lunatics. You just look in Canada at your leader. I mean, it's a complete disaster. He shouldn't be running a country. He should be teaching dancing at the school or whatever.
He was a
Not,
drama teacher. He was
not,
teaching
yeah.
acting. So he's acting like a leader.
Anyway, The point is simply my view of the world is the whole world expects interest rates to come down. That I would not rule out in the short run, partly because of political reasons in the US, and also inflation has cooled down somewhat. But I believe, like I started to work in 1970. So in other words, at the time, inflation was just moving upwards in the early 70s. And then it came down, and then it went up again, and then came down, and then finally it went up. And at the top in 1980, 81, we were at over 15% per annum price increases. And the interest rates were also between 15% and 20%, depending on the maturity and quality. But what I want to say is we had a period of disinflation, not deflation, disinflation between 1980, 81 up to recently. And now, after May 2000, when the 10 years treasury in the US was yielding less than 0.6%, 0.57%, we are now in a period of accelerating inflation and rising interest rates that could last 20 years or more.
Yeah, no, I don't disagree. And I see all sorts of factors that says that inflation isn't coming down and isn't coming down anytime soon. We talk about federal, the Fed policy and government policy. We've touched on it a little bit. We're recording this. It's March the 12th, and we're about a week away from the next Fed meeting where they're going to announce rates again. And I'm looking and I'm going, there's so many mixed messages. I have no idea what the Fed's going to do. And yet the market seems to shrug it off and keep going for new highs.
Well, I know what they should do. Under no circumstances should they cut rates at the current rate of inflation. Now, we should define what inflation is. But in my view, the increase in stock prices, the increase in real estate prices, and so forth, is a symptom of inflation, as are rising food prices, rising wages, rising insurance premiums, and so forth. So we have inflation. Now your household may suffer a rate of inflation of 4% and another household of 12%. That depends where you live and how you live and so forth and so on. But in general, in my view, the cost of living increases for most people is between 5 and 10% per annum at the present time. Now, the 10 years US Treasury is around 4%. In my view, in my book, interest rates are negative in real terms. In other words, inflation adjusted. When inflation is, say, 6% and bonds are yielding 4%, the negative yield is 2%. And in this environment, I don't see how inflation will come down significantly.
No, you have to have higher interest rates than the rate of inflation to bring inflation down. And you're right. They're not doing that. Although they hedge they fudge the inflation numbers, and so that they look like the interest rates are higher than inflation. But when the rubber hits the road, that's as you and I both know, that's just not the reality.
But the problem for the Fed is this: as asset prices increase, say home prices and stocks, and lately cryptos, more and more people live from the wealth effect of these asset price increases. Now, the commercial real estate market has collapsed. I mean, not by 90%, but say by 50% in the US, commercial properties have declined. The last thing the Fed wants to do now is to destroy the residential market. You understand, they're in a tough spot because if they increase interest rates from the present level, it's going to begin to hit not only the private sector, but the government, because the borrowing cost of the governments are going up.
Yeah, well, in the US, it's a multi-trillion with a T. Imagine that when I was in university, deficit that they're running. And it's only going to get worse if interest rates continue to rise.
Correct.
And you touched upon one of the economic flashpoints in the commercial real estate market, but as we speak, there's another small regional bank circling the drain in New York that they seem to keep kind of on life support. But they could pull the pin on that at any moment. And then there's the giant Evergrande default in China, where the ripple effects haven't reached the Western financial system yet. Um, you know, what do you see happening in those fronts?
Well, it's good that you bring up China, because I lived in Asia, in Hong Kong specifically, for 30 years, and the last 20 years in the north of Thailand. But I have never seen the mood about Hong Kong and China to be so negative as it is now. And the Hong Kong market and the China market have underperformed not only other emerging markets, but also the US since essentially 2009. It's been a complete disaster. But I see some value emerging in China and in Hong Kong and in emerging markets in general, because emerging markets have underperformed the US for years, for maybe 5, 10 years. And Hong Kong and China have underperformed everything in other emerging markets, Europe and the US. So in my view, there is actually some good value now to be available, especially in Hong Kong.
Now, will that value get unlocked before or after they finish unwinding Evergrande and deleveraging that giant elephant?
In the context of the whole of China, Evergrande is not a huge problem. And you have to understand, in China, in the last few years, the economy has slowed down in its growth trajectory. But it's not a disaster. They have made huge progress in some areas, infrastructure, and also in technology. And China is, of course, much more than just the real estate market, although the real estate market is where most Chinese have parked some wealth. And that is going to be a losing proposition. But at the same time, the Chinese people are not highly leveraged, the household sector, with a few exceptions. But in general, Asians have large cash reserves. That's why when there is a crisis, usually people can tighten the belt and survive. They do not depend on transfer payments by the government. In America at the present time, and also in Europe, not most, but say 50% of households get some subsidies from the government. And that is not the case in Asia. So yes, say in Hong Kong, property prices will probably continue to go down. But if I can buy a property company in Hong Kong and Singapore selling at a 70-80% discount to book value, even if the book value, in other words, the asset value, drops by another 35%, the asset, if it doesn't have any debts, is still worth more than the stock price. That's the point I want to make. The stock market has over-discounted the slump in properties in Hong Kong and in China.
Okay. So if I'm understanding you correctly, then the average Chinese person is not going to be affected by Evergrande. It's simply going to be a problem for the financial institutions that lent to Evergrande. And then
Yes, the
the average
individuals.
Chinese won't be affected at all because they're not
No,
leveraged against it.
that's not what I'm saying. He will be affected because the property market is going down and most
Okay.
Chinese own their properties. But it's not a disaster.
Okay, so they'll be less
Western
affected than the
media, the
financial
Western media will always write negative about China. Nothing will ever be positive that is published by the American Canadian media. Nothing.
No, I certainly wouldn't disagree with that. I find when I speak with Chinese nationals, and I do have the opportunity to, I get a completely different picture of China than I get from, what I hear in Western media. And I figure somewhere between their version and the Western media version is reality.
The reality, I tell you quite frankly, is any person with common sense and with intelligence should no longer listen to the Western media, should switch it off. The only reason I occasionally read and listen to Western media is to see how negative they are. I'm not listening to them to be informed. I'm listening to them knowing that they will misinform everything, but I want to see the degree of misinformation.
Here, here. Let's circle back to the banks.
You want to change the subject?
No, I don't want to change the subject. I agree with you wholeheartedly. I see stuff on the media and I just shake
Yeah,
my head going like
yeah.
that's just, it's they will gravitate to one thing and then beat it to death to the point where you think, you have a problem on every street corner with the same issue, and
Yes,
it's an
exactly.
isolated incident. Um,
Yes, absolutely.
but it's but they were kind of related. Like I'm not leading that. The Western media is ignoring another potential bank failure in the United States, and I look at that and Fed policy, and I agree with you. The Fed shouldn't be cutting interest rates anytime soon. But if another regional bank falters, do you think that that's going to cause the Fed to blink?
Not necessarily, but if the economy weakens, they will blink. As long as the economy holds up, in other words, as long as the deficit is large and transfer payments occur and the government pays for this and pays for that and so forth, I think the economy can kind of hold. But it's not sustainable because over time, these are inflationary policies that will lead to higher debts and higher interest payments. And soon, what will happen is that all the tax revenues are used to pay the interest on the debt. And that is simply not sustainable in the long run. But in the short run, it can be. And I just like to remind your listeners, if you go to Istanbul in Turkey and you walk around and nobody had told you that the rate of inflation is around 100%, you would observe people, they go into shops and go to the market and buy and sell and drive around, and you would notice that there is a crisis that is going to happen in future, but you don't know when. So all I'm saying is, if you print money, and every society that eventually went downhill, first they tried to overcome the downhill slope by printing money. The Romans did it, the Greeks did it, the Spanish did it, the British did it. Printing of money is the easiest near-term solution. And that's why I'm telling you once again, I grew up in the 1950s and 1960s. I know exactly, I remember exactly, because I went to work with 7 years old as a runner for pharmacy. and I distributed pharmaceutical products after school. So I know what the wage was, and I know what the price of a croissant was. In Switzerland, the price level in general is up about 10, 15 times since then. It's not huge over a 50 years period, but it is large. And property prices have gone ballistic, and art prices have gone ballistic, and so forth. So the result is simply that in the 70s, I had a relatively high salary compared to real estate and compared to, say, the Dow Jones Industrial Average. But now a young person coming out of university has a high salary, but it's not high compared to the price of renting or buying a nice apartment in the center of Montreal, Vancouver, Toronto, or Quebec.
No, and they're probably saddled with thousands and thousands of dollars of student debt as well. That makes that even more, or not more, but less affordable for them to be looking to live there.
Probably.
So to circle back to the Western media, if there were to be another bank failure, is the Western media going to beat that to death to the point where the Fed has, feels the pressure to change course? And so, as I said, I wasn't going to leave that alone. I just needed to circle back to it.
In my view, if it's a local bank, a regional bank in the US, it will not change their policies. But if the economy weakens, or if it's Bank of America and Wells Fargo and JP Morgan all together, for sure they'll cut rates and flood the system with liquidity. But for a regional bank, they'll talk to their buddies at Goldman Sachs and in the financial sector and say, okay, you put something together and take it over, and we'll make sure that you make money on it. That's the way it works in American politics.
Yeah.
At Wall Street.
Unfortunately, yes, that is exactly the way it works in American politics. And speaking of American politics, there's an election coming up this year, and as a Canadian, I have no say. I make that very clear in what happens. But I look and I go, in my lifetime, I'm looking at the two worst presidents that America ever had, and they're having another rematch. Cannot America find better choices?
I think intelligent people and people of integrity, they don't want to join the political, class. And the intelligent people and the smart people in America, they go into the private sector because they can do well without all the liabilities and headaches that come along with the political circles. It's the same at universities. The smart people don't become professors. The question really for the world is, does it make a difference? Because Trump, he was president. The only good thing he did is to do nothing. He should have played more golf, because under him, regulation diminished and the economy did relatively well. But you look at the debt accumulation under Trump, it was the same as under Biden. You understand, there's not much difference, because the government in the US, in my opinion, is not run by the president. I think they're just figureheads, they're puppets, and the strings are woven or pulled behind the scene. We don't know exactly who they are. We can imagine approximately who the influential people are. But I don't think it makes all that much difference. The deficit will stay high. No president has reduced the deficit significantly, except Clinton, by accident, because there was a booming stock market and asset prices went up. So the deficit actually was eliminated for a year, for a year or 18 months. After it blew out again. They're all ignorant interventionists, and anyone who trusts his government should be re-examined by a doctor. You cannot trust these politicians. Never. And the political class is obviously also the money class that runs the most precious commodity in the world, which is paper money at the present time. And these people cannot be trusted. They don't care about the lives of ordinary people. If you are a responsible person, you need to own precious metals.
Yeah, no, definitely. I've always said government's role is to lead, follow, or get out of the way. And the correct course of action, the majority, more than the majority of the time, is to get out of the way and do nothing. So you and I are on the same point. And I'm not saying that there's corruption there, but there's an awful lot of poor people that run for Congress and leave millionaires. So and then
Of
the
course,
job
there is
doesn't pay that
corruption.
well.
It's a huge corruption everywhere. It's just a question of the degree of corruption. In Africa, the corruption is maybe 80%. In other words, you pay 80% tax and 80% flows into the pockets. In an honest country, the corruption is maybe 5 to 10%, but there's corruption everywhere.
Yeah, no, I wholeheartedly agree. I remember there was a show about New Orleans that was on HBO called Treme, and one of the characters was running for city government, and part of his policy is he wanted to have a briefcase Sunday. So it was broadcast live every Sunday. People would bring their briefcases full of money and say exactly what they wanted to buy, and you knew which politician was taking what for what. I thought that was a brilliant plan. Well, we've cycled through all the problems in the world, and you've talked a little bit about buying precious metals. Gold, the gold price again. We're on, recording this on March 12th. Gold has been on a phenomenal run here for the last 2 weeks, closing at all-time highs, well over the $2,100 mark. While the rest of the economy, is looking pretty stagnant. So what is it that gold is telling us?
I think both the stock market, the gold market, and cryptos are telling us that money is not tight. What I said earlier on, money is still available for speculation. There's a rampant speculation in everything. And this will lead, in my view, to more inflation sometimes in the future, not necessarily for the next 6 months or 1 year, but in future we'll have higher inflation rates. And I think investors should be aware of that. And I'm not saying that gold is terribly cheap. When I started to work in 1970, gold was at $35 an ounce, and now it's over 2,100. So it's kept its purchasing power. I don't own gold to make money. I own gold to have some of my assets in a safe place. To make money, I need to point out that now gold shares are incredibly low, not only compared to the price of gold, but also compared to the stock market, to the S&P 500. So you're buying an asset class when you buy gold shares at the present time that is essentially doubly depressed against the physical, gold, silver, even platinum, and it is depressed vis-a-vis all other assets.
So that is one of your areas of boom that we should be looking at is gold equities.
Correct. Gold shares, mining stocks.
How about all mining stocks or just the gold stocks?
Mining stocks. I mean, silver, platinum, whatever. I don't know which one will go up the most, but I would imagine that platinum is very cheap vis-a-vis gold. But I would extend this view and say agricultural commodities and oil is even cheaper than gold. because agricultural commodities, if you measure it against inflation, in other words, inflation adjusted or adjusted for the price level, they are extremely depressed. But it's not easy for you to store a ton of wheat and a ton of corn and soybeans and so forth, whereas it's relatively easy for you to store a ton of gold.
Yeah, no, it is. Gold's also weighs a lot more than wheat and corn, so you don't need as much space to put it in. You also mentioned Chinese real estate as being another Hong Kong real estate, pardon me. And where else should people be looking at for opportunities? Because when certain things are
Well, in
bad, other
general,
things are good.
in general, emerging markets are very low compared to the US stock market. But I don't see a huge upward move until the FANG and FANG related stocks in America, in other words, Facebook, Amazon, Google, and so forth, all break down. And the semiconductors break down. Because as long as NVIDIA goes up, the whole world will speculate in NVIDIA. And as long as Bitcoins go up, the whole world is speculating in the Bitcoins. But once these assets that are now pricey, I'm not necessarily saying overpriced. In my view, they are overpriced, but this is my private view. But as long as they go up, money will flow into these sectors. This is the problem of money printing. It doesn't flow evenly into a room or into an economy. It flows unevenly and creates bubble first in this corner of the world and that corner of the world, and then. And we need these leadership stocks to collapse, and then money will flow into other sectors, not before.
So the key then is to watch the fangs and what happens there when they start to break down. That's when the commodities and the emerging markets are going to see their day. If people wanted to follow your musings, how would they do so, Marc?
Well, they can go on the website gloomboomdoom.com. I repeat, gloomboomdoom.com, all in one word.
Wonderful. I'll have that website under the description. And as always, Marc, it's a pleasure to talk with you.
Very kind of you, and all the best to your viewers, especially good health and good spirits. And as I said, I think precious metals are a necessity. And if you look for a depressed asset in the world, mining stocks are very depressed compared to everything else.
Well, I'm a little biased in that direction, but I can't say I disagree. Thanks again for your time, Marc.
Thank you very much. Goodbye and have a nice day.
The Prospector News podcast is for educational purposes only. The opinions expressed are those of the participants and are not to be taken as investment advice. Listeners need to do their own due diligence and seek advice of a licensed investment advisor.